when it comes to exports, we always thought that 2003 will be a year where the Chinese exports declines. And the way it happens is because China gained so much extra export share, market share, during the pandemic, 2021, 22, if you remember, that was the time when Americans, Western consumers were cashed up by government subsidies, and they all rushed to Amazon to order. And merchants in the Western economies sort of look at their factories in emerging markets and who's open? Only China, because at that point Mexico was closed because of the pandemic, Vietnam was closed because of the pandemic. And so there was that extra market share that today has to be given back. So I think when it comes to at least the economists that we speak to, that's fairly consensus where export is at best not going to be a boost to economic growth this year.
Would you say this is correction essentially in that sense, normalization?
Yes. Exactly, normalization. Okay. And so the growth will have to be pulled forward by other parts of the economy.
I mean, I suppose exports and the slowdown there is largely priced in. I mean, that's what dual circulation has been all about over in China. But I'm interested in terms of imports and what that's telling us about domestic consumption and demand at home in China. Is the numbers that we're seeing when it comes to those imports a sign that the recovery is just not going to plan?
Yeah, I think there's no doubt that economic recovery or the growth has decelerated in April and in May. You know, whether it's the companies we speak with or as we travel around China talking to our taxi drivers, the service wait staff, things are slower coming into the later part or as into the second quarter. I think there's a couple of reasons. One is that the economic reopening or the recovery trajectory in China looks different than that of the West because you didn't have the direct consumer subsidies, so the consumer weren't rushing out of the gate consuming. And I think a couple companies told us, interestingly, that they think the households are simply very tired because after 3 years of on and off lockdowns, the sentiment is quite fragile. So at this point, what we need to see is more supportive measures coming out of the government in order to get the recovery back into trajectory.
Is it the right move, though, you know, in terms of further lowering the rates on the dollar deposits? Because you could argue the fact that, yes, it could stimulate consumption to the effect that, you know, you're not going to want to hold your cash in the bank if you're getting less of a yield on it, and perhaps that could lead to some speculation, lead to further consumption. But at the same time, if you're someone who's holding cash in the bank and they're doing that, that doesn't necessarily make you incredibly confident. If anything, that would make you a little bit more cautious, a little more reticent to spend because you'd be thinking, what's going on here? What's going wrong? Is my economic future over the next 12 months in a little bit of a doubt? So sans any kind of specific consumption targeting, do you think that you're going to be able to see that recovery that everyone's expecting in the second half?
Well, first of all, a couple of things. One is the consumption part of the recovery is actually not going so badly. Right? It's really the other parts of the economy, the SMEs especially, and the exporters are sort of the ones that are providing the drag into economic growth. And you're right that stimulating the consumers are notoriously difficult. It's a bit of like pushing on a string. And the normal playbook for the Chinese government seems to be to stimulate the corporate sector, particularly directing resources, whether it's monetary loosening or fiscal spending onto the small, medium enterprise part of the economy. And then it does look like, based on the talk so far, on onshore newspaper, etc., that seems to be the direction of the next round of policies coming up.